strategy with 1031. Any questions before we go here? Any clarification on anything? Yes.
Yeah, so I'm still a little confused about the business portion of it. So I understand the real estate and deferring your taxes in that regard, but if you're creating a business and taking advantage of this opportunity zone fund, is the benefit that you want to sell your business after 2016, or what's the tax benefit from a business perspective?
Let's
take the art gallery
corporation.
for instance. So you have this art gallery and they want to set up in an opportunity zone fund. The tax benefit comes from them wanting to sell their business down the road? Or?
The tax benefit comes from the sale of whatever value they created down the road, yes.
Of just the business entity, not the operations of the business?
You can, yes, the business entity.
Yeah.
So it's better to do real estate because then you can sell individual assets within the fund and keep deferring. And after 10 years, you're going to step up to fair market value. But you have to pay the tax by December 31, 2026. The original gain, right. Go ahead.
I think I might have missed it, but you said something about a relative and a lease. Could you go over that again?
Yeah. The sub-fund can invest in like a triple net deal. You know what a triple net deal is?
Yes.
Like people, like a lot of these doctors, they go buy an El Pollo Loco or, you know, McDonald's or something. You know, they own the land or they own the property and they're leasing, you know, the tenant is leasing it. They're always triple net. So the tenant pays the cost of maintenance, insurance, property taxes, utilities, etc. So that can't qualify for a sub-fund.
You can?
Cannot.
You have
No.
at least
Well, what
You
if
have to retain
Yes.
something. You have to pay the insurance.
Period.
Yeah.
They can pay the
property
Mark, I
tax,
think his
whatever.
question is that if you buy the property, can you lease it to a related party?
Yes, that's what I was.
Yes, you can. Yeah, you can lease it to a related party as long as the deal is it's an arm's length transaction. It's for fair market value. Remember we talked about fair market value.
Do all sub-funds have to have sub-funds?
No, not necessarily. It depends how big they are. If you know, if we see like anything over 20 million, they have sub funds 4, 5, 6, 7, 8, 9. You know, they invest in opportunities on property. The lady in the back. Yes. Yeah, if you pass your business cards to Remy, we'll put you on a mailing list for our firm and we'll send you everything. Any other questions?
I can let you guys business card so they can send you guys a card.
Go ahead. Lady right here. Go ahead.
Yeah, I wanted to ask you.
Yeah, sure.
Is,
You're welcome.
building and opportunity zones qualified for
Any building, any asset in the opportunity zone. Could be a farm.
Originally, I learned that you must spend as much as you bought the property on it to upgrade it, then it would be qualified for the
No,
opportunities.
no. You only can.
So it doesn't matter if you upgrade it or not?
Yeah. Oh, that's the substantial improvement. It's only to the extent of the tax value of the building. If you have a piece of land that hasn't been touched for 5 years, you really don't have to do anything. So there's also rules regarding the land. So you have a piece of land sitting for 5 years, there's no minimum that you have to invest in, you know, improving the land. Go ahead. That's in the material, so we'll send it to you. There's one for the federal government and one for California. Yes.
So, I know you said a sub-fund for U.S. Treasuries. Is that the only
Thank you.
banking option?
No.
Or like ETFs?
What we deal with, you know, like this particular client has a $57 million gain and it's on cash. So it's sitting in that fund. So they deal with Goldman Sachs is handling the money, so they're investing it in treasuries right now.
And
Because the sub-fund income requirements, remember the 50% test?
let's
That's-
say Goldman Sachs invested in gold or stock.
Doesn't matter, it doesn't matter.
Would that count also?
As long as it doesn't disqualify the fund as collectibles. Remember the collectible exclusion? Let me send you the material, you go through it.
Sorry.
Yeah,
Thanks.
go ahead.
If you already own properties in opportunity zones currently, is there any advantage that you could take, that you could utilize other than selling the property for? So let's say you own the land.
You sell it to a fund,
Or,
you know?
or you
They would
could,
invest it.
could you take the land and then create a company and construct on the land and then take advantage of the value that you create by creating a building on the property? So for example, you take the land, you
Best
build a
thing, best strategy would be to find an opportunity zone fund, have them buy your property and retain a carry interest. So let's say I'm doing a joint venture. Let's say I own this huge distribution center in downtown LA on 7th Street. That's the zone. Somebody wants to buy my property because they have significant gain. Fine. I'll sell you the property. You put the property in your opportunity zone fund, but I'm going to get a profits interest. There's two types of partnership interest. There's tangible interest where you have money in the deal, and there's intangible interest where I have no money in the deal, but because I'm managing it, you know, I get a piece of the action. I get a piece of the profits at the end when you sell or refinance. So there's many ways that you can structure these deals.
But you couldn't do the development yourself and then take advantage of it.
You can't do the development for the owner of the fund. But no, it has to be it has to be acquired with gain money.
I see.
You see,
I
so
see.
somebody has to have a gain. They have to invest it in a specific fund.
But if I took
That's-
gain money from another sale and put it onto an opportunity zone, that a piece of land that I already owned, could that constitute?
That's the 20%.
Uh,
As long as you have 20% is. So, you know, you gotta really master the rules, and you have to know how to do it. I mean, 31s are very difficult too. I mean, we deal with very seasoned developers. I mean, it's a struggle to deal with 1031s. They're not that easy. So here's a comparison of